to Nirmal Bang, ladies and gentlemen. I'm Hiral Dadia. We have with us Mr. Kalpesh, the Head Corporate Planning and Strategy at Star Housing Finance, joining in. Welcome to the show, Kalpesh, and always a pleasure to speak to you and get insights from you, and especially when we are seeing this kind of growth coming in a sector that you belong. In fact, recently I was reading a report as well, but that residential housing is, I think, almost at a 9-year high, and that is fantastic news, especially when we've seen a crunch coming in during the period of COVID, though real estate was always booming at that point as well. So, how would you actually describe the first quarter of FY23? How has the year begun for you?
Yeah. Hello, Hiral. Always pleasure to be over here. And as you rightly said, that Q1 has started with a bang for Star Housing Finance. And, I would attribute this particular growth due to the fact that the rural housing part of it is basically now those green shoots that were visible are now right now in a position to have a further traction in terms of overall demand that is emanating from these rural areas. And that stems from the fact that rural geographies are right now experiencing growth on 4 different pillars. The first is obviously the infrastructure buildup that's happening in the rural areas, which is so ease of movement, development is now touching those rural areas. So obviously that housing also is one of the first sectors which basically gets affected and leads the overall growth chart, even at the macroeconomic level, and the same holds true for the rural areas as well. So that is something which we are experiencing. Second thing is obviously the nuclearization, Hiral, that we saw in the urban areas back in 90s, 2000, 2010. That is something which is now we are experiencing in the rural areas as well. So that nuclearization is leading to spreading of families, and obviously the incremental demand for housing that emanates from it. That's the second pillar due to which we are seeing the incremental demand. The third part of it is obviously the digitization, which has kind of swept the entire country thanks to the schemes of central government as well. That digitization is now finding its place in rural geographies. So the way you can with ease with which a particular borrower or customer could be reached by even a semi-urban based housing finance company, that basically gives you more leeway in terms of reaching out those incremental customers. And last but not the least, the kind of incremental demand that is getting generated from the reverse migration. The more than 10 crore of population basically were reverse migrated during the COVID pandemic time, out of which more than 25 to 30% are now staying back, and because of which we are seeing incremental demand of around 10 million housing units across the country. So that is basically facilitating the overall growth of housing in the rural areas. And obviously we being a rural focused housing finance company now stand to gain out of it, and I think now it's our time to shine under the sun at this point in time. So as you rightly mentioned, Q1 we have grown, and Q1 has been the best quarter for us during our operational history. And the disbursement that we have done during the quarter are more or less more than 3/4 of the entire year of disbursement that we did in the last financial year. So hopeful that this momentum we will carry on in the next quarters and build up AUM from here on.
Right. So overall, if you see in terms of the numbers that we've seen as well, do you think that's something which is sustainable?
Yeah. So just to tell you in terms of my growth perspective, I as I said, disbursed almost 75% of my yearly disbursement in Q1. What I'm planning to do in Q2 basically is to sustain this particular momentum, and I get confidence due to the fact that early days, but the first half of this month itself has been seeing that kind of traction. My 1 week login is equivalent to my 1 month login that I did in the last month. So that basically gives a lot of comfort. Obviously, there are benign macros that are involved behind this. See, recovery, as I said, recovery in any country or in any particular geography would start from housing, because housing is the one which gets associated with 250 allied or industries. So the same thing is happening in the rural part of it as well. The inventory levels are coming down. The holding period are coming down, and more of so in case of affordable segment where the developers cannot afford to have more holding periods. So such kind of churning which we're seeing at the pre-COVID level, and the rate of the growth of mortgage market space in rural areas, which was at around 38 to 42% for a smaller to mid-sized housing finance company like us, that is now going back on it. So I think that Q2 should be good. I think that our AUM, subject to, obviously I'm not giving any guidance over here, but our AUM should cross 150 odd crores by 30th of September, and that should pave way for the H2 part of it, which obviously is more than H1 for any housing finance company. So yeah,
Right.
we are pretty much confident to it. And also, Hiral,
yeah, go on.
one more thing I wanted to add is that we are creating capacity as well. So as I said previously, we were having 7 physical branches. We have now invested to create 8 more physical branches, predominantly in rural areas. So I would be operating with 15 odd physical branches, and my staff strength would be around 125 odd people by end of summer. So yeah, we are looking forward to it.
Right. So overall, how would you divide the split between urban and rural in terms of, AUM share right now?
So as I said, Star Housing Finance was, is, and will remain a rural focused housing finance company. When I say rural, it does also mean that there are rural areas that are adjoining to the metros and the mini metros part of it. So we are present over there as well. And in pure play rural areas also we are present, and the 8 odd branches that we are opening, those will be in pure play rural areas. So going ahead, I would say that around 70 to 75% of my traffic would be coming from those pure play rural areas, and 25 to 30 would be coming from the adjoining urban counterparts, the adjoining rural areas to the metros part.
Right. And overall, another thing what I noticed is in terms of segments as well. I know we are on the low ticket housing size of it, but are there any specific segments where you're seeing traction, maybe in terms of geography, or, maybe in terms of, salaried, non-salaried people? What's that segmentation looking like?
So as I said that demand for housing is there across the spectrum in the rural areas. And Hiral, one important thing that I wanted to tell you is that even if a borrower on my application form shows himself or herself as a salaried, there are allied sources of income that a particular person would be subjected to ensure that the categorization of low income group, which is 50,000 rupees per month, that gets to the fore. So it's not just pure play salaried or pure play self-employed. You can't just distinguish between the these two profiles at the rural side of it, and more of so for the people in LIG segment living in the rural areas. But having said that, we are seeing reasonable traction amongst those kind of profiles who would want to have a productive housing as such in their places. Now productive housing is very niche kind of a subject in rural areas, where a room in the day during the day basically gets converted into a workplace or a workshop, and then at the night, at the evening, it gets converted into the house. So professions like tailors, professions like carpenters, professionals like the ones who basically are into papad making industry, agarbatti industry, unit kind of a unit. These people are now coming to the fore for housing. So we are looking forward, and we are in fact even in the process of developing those catered products that would satisfy the kind of requirements that they are looking for. So yes, this segment is now finding its place as we speak.
Right. And overall, if you see in terms of the arrangement that you have in terms of co-lending, which has also given a boost to the business, how does that look like, and what are the modalities of it? What percentage of the AUM comes from co-lending?
So, the institutions are interested in entering into co-lending partnership with Star HFL because of the fact that, I am pure play retail in nature. My my customer segment are first time home buyers. The units that I'm financing kind of qualify under the Pradhan Mantri Awas Yojana, and the loans that I'm giving basically qualify under the priority sector lending norms as per the RBI guidelines. So more than me seeking out for a co-lending partnership, we are getting interest evinced by several big ticket NBFCs as well as banks to get into the partnership. And what we bring over here is a domain. The geographies in which we are operating, we are very well versed with the kind of technical, the local know-how of the segment as well as the units that we are financing, and hence we are seeing that interest being evinced by the big ticket lenders. So modalities are pretty much the same. It's like in line with the RBI guidelines. 20% of the incremental lending that does under co-lending is on my book, and the 80% remains on my partner's book. I tend to source, process, underwrite, and collect the entire loan during its entire life cycle, and ensure that it remains standard. So it is as per the RBI guidelines, and it is 2080. Just to answer to your part.
Right. And overall, if you see in terms of growth from here on is concerned, what are the newer geographies that we're looking to enter, and how is the collection efficiency also panning out? Are we seeing an improvement on that end?
Yeah. Very good question. So right now at this point in time, Hiral, the 8 new centers that I'm planning to open, or I would be opening over the next 3 to 6 months, they would be in my existing geography of operations. I am kind of really expanding, deciding to expand in Rajasthan. I have opened up a center in Jaipur. So previously I was in southern Rajasthan. Now I'm moving into the central and the northern part of it in a reasonably big manner. Maharashtra is something which we are penetrating deeper, and there are geographies in and around Pune, in and around Akola, where we would be penetrating deeper into. So these are the main markets where I will be operating. Obviously, from in the Q3 or Q4 onwards, the new geographies that as we are talking about would be coming to the fore, because in the Q3 Q4 I have to ensure that my Q1 capacity gets created, right? So Q3 Q4 will be the one where probably I may decide to expand either northwards or southwards. Right now, if you ask me, UP as a market looks really very attractive to us, and obviously Karnataka is something which we would be looking forward.
Right. And then overall, if you see in terms of FY20 outlook, what's the growth we are aiming to achieve, or what's the next milestone we're looking to cross? Because we're already on a spree of achieving milestones.
Right. So, Hiral, it stems from the fact that my base is very low. I have just started to grow, and we have decided that be it 100% or 200%. Again, I'm not giving any guidance over here, me being a listed company, but we want to ensure that whatever capacity that we create, that gets utilized to the fullest. So as of now, over the period of next 3 quarters, I would say that by 31st of March 2023, we would want to have our portfolio size doubled, our AUM being doubled. So from 100 odd crores, I would want to become a 200 odd crore AUM company. And it again depends, because see, Hiral, as I said to you that if you are doing 150 crores AUM by 30th of September for that matter, and H2 traditionally for every housing finance company is much bigger than H1, then no sky is the limit. So we are taking one step at a time. We are done with Q1. We are done with celebrating Q1 as well. So now Q2 is important. Once we achieve that particular landmark of whatever we have, set our sights on, then we will see on from here. Collection efficiency, to answer to your question, has remained well. The portfolio that I am generating, the retail portfolio that I am generating, as I told you that my exclusive retail focus has begun from October 2019 onwards. So that exclusive retail portfolio has remained, is shaping up really well. I do not have any NPA in my retail portfolio since October 2019, and I think 6 more months of seasoning and the credence would be there to be seen for everyone. But collection efficiency has been holding on well. Incremental collection efficiency has been close to 100%, and the accounts that were stressed due to COVID-1 and COVID-2 lockdown, those are turning up well now. They are incrementally honoring their obligation, and we are walking the talk to ensure that whatever delinquencies they were there, probably bucket 1 or 2 or 3, those will be brought down in a phase-wise manner. So yeah, collections have remained stable, in fact improved a bit in Q2.
I think it looks like a good growth story overall, but for the sector from what you're mentioning. So hoping to see you guys scale new heights and achieve the milestones that you are aspiring for as well. Thank you so much, Kalpesh, for joining us on the show. It's always a pleasure. Congratulations once again, and good luck for the coming quarters.
Thank
Speak
you
to you
so
soon
much,
again.
Hiral. Pleasure is all mine. Look forward to speak to you again.
Absolutely.
Thank you.
Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.